Hi all and welcome to our weekly report. We have a short week ahead of us which starts with quiet calendar on Monday. RBA interest rate decision and statement are due on Tuesday. Bank of Japan monetary policy minutes, China trade balance and RBNZ interest rate decision are due on Wednesday. US trade balance is due on Thursday and the week will finish on Friday with UK GDP, UK manufacturing production and trade balance data. In the afternoon, markets will pay attention to US consumer price index, Canada employment data and average earnings. Now, let's take a look at few markets. This is the intraday 4-hourly price action for euro-dollar. Euro-dollar has been under pressure for quite some time, currently capped by this falling resistance trend line. However, we saw a rebound on Friday with US dollar weakness as a result of non-farm payroll numbers which were being published. The key levels for us to watch going forward are initially at this falling resistance trend line and the sequence of slightly lower highs at 1 spot 12.37, 1 spot 12.40. Price action appears to be bearish below that level, potentially targeting downside support. So basically either a rally into that level and rejection, or a rejection of these current lows and a gradual move lower could open the way for the retest of 1 spot 10, 111, sorry, 110.80, possibly even 110.20, 110 to the downside. Alternatively, only a spike higher and the end of day close above this area here, 112.40, would negate the current intraday bearish outlook, potentially opening up the way for a spike higher and test of 1 spot 13.25, therefore the cluster of these highs and then previous lows, and then gradually towards 1 spot 14, 1 spot 14.76. Very similar situation with cable, sterling dollar. Sterling dollar was under pressure. The key level for us to watch was at that 1 spot 30.30 level, 1 spot 30.80 level. Finally, the price broke through this previous resistance, which was represented in a falling resistance trend line, and we had a retest of that level from above as a newly found support. So therefore a small falling wedge, breakout falling wedge and a spike higher. Yet again, very similar situation, initial US dollar weakness after the publication of non-farm payroll, and cable pushed higher as well. So the current lows are up here at 1 spot 31, nice and round number, very similar to these highs here and cluster of these lows. So very, very nice support at this round number, psychologically important 1 spot 31. Price action appears to be bullish above that level, so either a pullback into 131 and a rally, or a gradual rally from the current levels towards 132.40, possibly 133, 133.86, 134 on the upside. Alternatively, either a pullback and the loss of 131 would then retest 130 as a logical downside support for another bounce higher. Only the end of day close below 1 spot 30, 129.36 would then negate this bullish intraday outlook, potentially opening way for a deeper retracement towards 128.50, 127.80, possibly even 127 to the downside. Very similar situation with dollar Japanese yen. We had initial spike higher towards 112 dollar yen. This pair was not able to sustain itself above that 112 resistance and a gradual move lower. Reaction to non-farm payroll, we had a spike higher and then subsequent pullback, so therefore US dollar weakness. Loss of these current lows at 111.80 is quite telling at the moment, potentially indicating bearishness going forward. The next level of interest to the downside is twofold. So we have this one, sorry, I'm just trying to find where my fib is. Here we go. From this swing low to this swing high, so 109.70 all the way up to 112.40. We have 50% fib retracement very close to the current lows, and then even more significantly 61.8 fib retracement, so therefore retracement of this impulsive move higher towards 110.75. Huge important support to the downside. So either a pullback and then rally from there would potentially target 111.50, 111.80, breakout above 111.80, 112.20, 112.85, 113, 113.50 to the upside. Alternatively, a dip lower and the end of day close below 110.75 would negate that level, therefore confirm these current bearish outlook, potentially opening way for the retest of 110, 109.75, possibly even 109 to the downside. Now let's take a look at gold. Gold is still capped by 1285, 1290 level. We talked about the end of day topping head and shoulder pattern with a neckline around that level. This is the 4-hourly time frame. It's pointing to the existence of this falling resistance trend line. We had a couple of rising wedges here which ended up in a flush lower. Price is currently capped by initially 1280. Only a spike higher into that 1285, 1290, and the rejection from there would obviously confirm the bearish outlook, or potentially just a dip lower and a loss of these lows at 1270 to 1270 would also confirm bearish outlook, potentially targeting deeper downsides towards 1257, 1240. Some longer term bearish traders are even pointing to 1220. Alternatively, if we see a spike higher and end of day close above 1290, retest into 1294, and then a retest of this falling resistance trend line from above as a newly found support, and a spike higher, some aggressive buying above 1290, 1294 would change the outlook and target 1300, 1302, possibly 1310, 1318, 1325, possibly even 1333 on the upside. This is WTI crude. WTI crude had a bearish pullback lower. This is daily and also 4-hourly rising support trend line, previous rising support trend line, pointing to the significance of this 63 level. We bounced off that level on a couple of occasions, and we flushed lower, and then we have the end of day close below that level now, which is signifying bearish sentiment. This area here at 61.25 is also 61.8 fib retracement from these swing lows at 58.30 all the way up to 66.50. Bears appear to be in complete control below 63, so therefore either a spike into 63 and a rejection supports bearish outlook, potentially targeting 61.25, 61, possibly 60, 59, 65. Only the loss of that level would target 58. Alternatively, a spike higher and breakout above 63, spike into 63.91, an end of day close above that level would negate the bearish outlook, and then target 65, 65.50, 66.50, possibly even 67 to the upside. Thank you for watching, thank you for listening, stay safe, happy trading, and bye for now.